Hello, guys. Welcome to Pit Mania. Today, we're going to be talking about trading psychology. So, trading is emotional. I get it. When you see your money going up, when you see it going down, it's exciting, it's frustrating. You feel all of these different emotions. But today, we're going to learn how to manage these emotions by using proper risk management strategies. So, your psychology is directly linked to your strategy. And a lot of people, a lot of gurus, uh, a lot of traders will say, no, that's not true. Hey, your strategies has nothing to do with your psychology. Um, but I believe that it totally does, and it plays a big part in how you manage your emotions. And I'll explain what I mean. So let's say you're in a trade. Uh, so let's say trade number one, right? You're in your trade. You have no stop loss. Boom. Number one, you have no stop loss. Number two, you have no take profit. And number three, you blindly entered with no confirmations, um, no knowledge, no bias, nothing like that. Bias, etc. Right? So this was clearly an impulsive trade. You just entered in, you just got in. Uh, no stop loss, no take profit. This was a purely emotional trade. So I would call this emotional trading. Maybe you had FOMO kicking, which is fear of missing out. Maybe there was some news and you thought to yourself, man, I have to really get in here. Maybe you just lost a few trades and now you're revenge trading, which is a big deal. Big mishap. So those are some of the things that could cause you to have uh, bad, super bad emotions. Your mind's not going to be in the right space. And of course, when you see that price moving in the opposite direction, you're going to be extremely mad. And this could just be a very bad cycle. And you're just going to keep going. You're going to lose again. You might revenge trade again. You might have some more FOMO, and you're just gonna keep having these emotional mishaps. So, so how do we combat that? And the simple answer is following your strategy. So there are millions, there are hundreds of thousands of strategies. You can create your own strategy, you can copy somebody else's strategy, but there are many strategies that you can use to become profitable. And you should stick to one strategy. And a lot of times when you don't stick to one strategy, this is where a lot of the psychological mishaps can occur. Okay? Just like if you are trying to accomplish one goal and you're listening to 100 different people yelling at you, say, do it this way, do it that way, and you try all these different ways, and let's say one way works one time, then it doesn't work, then you switch, and then the other doesn't work. All that's doing is adding more and more frustration. Over time, your frustration is building up. You're saying, man, why can't I seem to win? I may win one time, but then I lose 3 times in a row. What's going on? So this is why sticking to one strategy is super important. And your psychology, the way your mind works, is through habit. So if you're constantly changing your habits, changing your strategies, how can you expect to become profitable? How can you expect to see big results when you're not sticking to one strategy? Now, please don't confuse one strategy because there are many strategies. Don't confuse the term one strategy with like scalping strategies and let's say swing strategies. When I say strategy, I mean specifically your entries and confirmations. Okay. This is what you want to be super tight on. Super tight on. Along with your overall strategy, but more importantly, your entries and your confirmations. Okay? Again, how can you expect to see results if you keep changing your habits? So it is inevitable to lose in the forex. You are going to lose. So you have to have a mindset of there is a possibility that I can lose. If I do lose, that does not mean my strategy is invalid or my strategy is faulty or that my strategy doesn't work. It just means that the market makers um, they did not respect your key levels. They did not respect your support and resistance, or there are some other factors in play which the trade did not go in your way. So that does not mean that your strategy, just because you lose, that does not mean that your strategy is wrong or that it's incorrect. And a lot of the times, any strategy could work. Seriously, any strategy that you come up with can work as long as it consists of confirmations. And your confirmations could be specific price action. It could be a combination of price action and volume. It could be dealing ranges. It could be all sorts of things, but you need to have confirmations in order to ease that mental side to say, okay, well, I see the price action. I see maybe some volume. I see that we're in a range here, and I see that we have maybe a little basing candle here. I see all of these things. I put all of them together. I confluence all of those things together, and now I'm entering into a trade. So now that you have these confirmations, this all this is an extra layer to help your mental side. I'm a firm believer that trading is 90% psychological, 10% technical analysis, fundamental analysis, all those different analysis you can do. It is purely, purely psychological 90% of the time. Okay? So imagine how you would feel, right? If you had all of these confirmations. And now imagine if you had felt if you had no confirmations. Okay? Let's say you just blindly entered. Now, you have no target zone, you have no stop loss, you have nothing of that sort. You have nowhere to gauge whether you are doing well or if it's just a minor pullback. You have no sort of mental security where you can say, okay, this is happening and we can expect X. or X is happening and we can expect Y. You have no sort of mental preparedness. And this is why I say your psychology is directly linked to your strategy, because you need those things to have inner peace. You need those things. You need to have your specific rule set, and you need to follow that each time so that you do not fall down a rabbit hole. You do not take unnecessary trades. You do not have FOMO. You do not have all these things. And it is hard. I understand it is very hard to stay in the rule mindset and to follow your rule set, especially when you see, let's say maybe you just got out of a trade and it keeps going in your direction with extreme volume, even though it's past your zone. You shouldn't enter, because you're eliminating one factor of your confirmation. So now maybe instead of 2 or 3 confirmations, or instead of 3 confirmations, you have 2. Instead of 4 confirmations, you have 3. Instead of 5 confirmations, you have 4. Or maybe now you have 0 confirmations. Okay, so you want to make sure that you have a clear understanding of what the market is doing, i.e. your strategy, and you want to have those specific confirmations so that your mindset is not affected once you're in a trade. Okay, and if you lose, you lose. If you win, great. You were correct. So this is going to give you more confidence in the future, but do not let that confidence overshadow your confirmations. Do not let that confidence overstep your due diligence. So here are 5 rules you will want to take away. Number 1, accept your losses. Losses are inevitable. At some point, you're going to lose. You are not the banks. You are not the algorithm. You're not going to predict every move. At some point, you are going to lose, and you have to accept that. And number 2 is very, very important. And keep in mind, these rules are not in any particular order. No one rule is more important than the other. Even though I just said number 2 is very important. They're all very important. Number 2, journal your trades. Write down your emotions in your trade. Of course, you want to write down the setup, your strategy, what you were thinking, what sort of price action you were seeing, all those sorts of things. You want to journal your trades. You want to journal your wins and your losses, especially your losses, because that is where you can look back and reflect and see, what have I missed? What confirmations didn't I have? How was I really feeling? What can I do better? And so that in the next trade, in the next few trades, you have something to look back on and say, okay, I want to do this and I don't want to do that. Number 3, have 3+ confirmations when entering a trade. Every single time, you need to have at least 3 confirmations when entering a trade, whether it be price entering your zone, price grabbing liquidity. You just need to have 3+ confirmations when you enter your trade. Of course, that's all in your strategy, and you come up with your own confirmations. Number 4, set a daily limit in your mind, percent gain and percent loss. A lot of traders like to use, let's say, like a 1% daily drawdown per day. So they lose more than 1%, they're done. They're done for today. Or 1% per trade, and maybe they make 2 or 3 trades. So that's 3%. But you want to set a daily limit in your mind for your gains and for your loss. More specifically for your loss, but also for your gains, just so that you do not become greedy, that you stay level-headed, and that you keep yourself in profit. And number 5, you want to reset and rest your mind. You do not want to be sitting in front of the charts all day, every day, 5 days a week. Okay, you want to give yourself some rest. The market is going to come to you. It does not take long to find your zones. It does not take 8 hours to see what price is doing. It does not take that long. You need to step away from the computer, especially after your losses. Maybe if you have a big loss one day, and even after a big win, that is time to step away. It's time to step away after you have reached your limit, as explained in number 4. Okay, these are all rules that will help your overall mindset. It will help your psychology. It will help you stay level-headed, and you can reduce the amount of emotions that you have while trading, while you have a loss, and even your greed when you are in the win. So thank you guys for listening today. It's Marquise from Pitmania. Look out for more videos soon. We're going to be going over some strategies. We're going to be going over bias. We're going to be going over a lot of cool things that can help you in your trading. Thank you guys very much. Have a great rest of your day.